Welcome back. Today, we're looking at an analysis report titled Better Than NVDA, Why Broadcom is the Real AI Winner of 2026.
A very punchy title.
It is. The core idea is that Broadcom is this overlooked, safer AI play that's set to dominate by 26, thanks to custom silicon and open networking. It's a strong contrarian take, so let's just jump right in.
Okay.
So the first thing that really stands out is that foundational comparison, the constant framing of AVGO against NVIDIA.
Well, I get it. It grabs you immediately, right? You're challenging the king. It's an instant hook.
It is, but I wonder if leaning on it so heavily actually ends up limiting the power of the Broadcom story on its own.
Yeah.
So here's the first major point. While the contrarian angle is inherently engaging, constantly framing Broadcom as better than NVIDIA risks distracting from the unique, independent drivers of Broadcom's own growth.
It forces the argument into this zero-sum game.
Exactly. It implicitly suggests that for AVGO to win, NVDA has to, slow down or stumble.
And that narrative might actually cause the report to miss places where both can thrive. I mean, Broadcom could be providing the network backbone that supports bigger and bigger NVIDIA clusters.
Right. So it inadvertently weakens the standalone case for Broadcom as this master architect.
If the core argument is strong enough that Broadcom is capturing this second wave of AI infrastructure, then it shouldn't need NVIDIA to fail at all.
The reader needs to buy into the Broadcom growth story, not just its arbitrage against a competitor.
So what's the fix?
The suggestion is to really adjust the focus, maximize the distinct investment thesis for Broadcom, center the whole report around their role in that second wave, their hybrid business model.
Less about the competition?
Much less. For example, maybe you rethink the title and the headers. Something more like Broadcom, architect of custom AI silicon, or the unpriced catalyst for 2026. It just minimizes that constant direct comparison.
And then you have to back that up in the core thesis.
This is where you get concrete. In that core thesis section, you need to expand the argument and explicitly detail the total addressable market for custom ASICs.
You mean for things like Google's TPUs or Meta's MTIA chips?
Exactly. Model that out based on hyperscaler CAPEX projections. The key is to do it completely independently of how many GPUs NVIDIA sells.
I see. So you're building a case that shows a massive, self-contained revenue stream for Broadcom that exists no matter what.
Precisely. If you can show that the custom silicon market alone justifies the valuation target, the thesis becomes almost unassailable. It stands on its own 2 feet.
That shift from a zero-sum game to an independent growth story, that's crucial for credibility.
Agreed. Okay, so that sets a high bar. Now let's move on. Let's look at the section on the Civil War, the shift from InfiniBand to Open Ethernet.
Which is a really powerful technical argument for Broadcom. It positions them for total networking dominance.
The report absolutely nails the technical story. The why Ethernet is winning, it's cheaper, it's open, it's standards-based. That's all very clear, very sophisticated.
But
it stops at the tech victory. The analysis stops just short.
Yeah, the sheer scale of this battle happening in data centers, it demands a much clearer quantification of what this actually means for Broadcom's revenue.
So here's the second topic. The massive battle happening in data centers requires a clearer quantification of the forecasted revenue implication for Broadcom from adopting its Jericho 3 and Tomahawk 5 chips. Like we said, the report nails why the shift is happening, but it doesn't connect that technical win to a projected dollar figure or even a market share metric, especially with the shift accelerating in late 2025.
It leaves that why it matters bullet point feeling, financially ambiguous. You've explained the tech, but you haven't told me what the prize is.
And the scale of this is just enormous. We're not talking about a simple software patch. This is a multi-billion-dollar hardware overhaul for these cloud providers.
A complete rip and replace of their networking fabric.
Right. So this move away from closed systems like InfiniBand represents a guaranteed multi-year revenue pipeline for Broadcom. We have to see that quantified.
The suggestion then has to be integrating forward-looking metrics, volume, percentages, something to show the scale of the win.
Yes. Translate that qualitative tech advantage into a concrete financial forecast. And look, if specific dollar figures are just unattainable,
Which they might be.
then use industry projections. Use estimated production volumes to at least illustrate the scale. You could, for example, reference the reported ramped up in volume for the Jericho 3 AI chip.
Or you could project the average revenue per networking core from the Tomahawk 5 chips in these new AI clusters. That's a great proxy.
Absolutely. And I think the most compelling way to do it would be to quantify the potential market share AVGO could capture in new scale-out clusters by the end of 2026.
Because of this choice, open Ethernet over closed InfiniBand.
Yes. That transforms the tech superiority into a hard, competitive financial win. It's what separates a detailed analysis from a truly high-conviction one.
We need the financial coordinates to match the technical depth.
Exactly. Okay, turning now to the financial comparison. Specifically, this powerful claim that Broadcom is a fortress with a superior safety factor.
Which is central to the whole safer play part of the thesis.
And I can see what the report is going for. You have this contrast between cyclical hardware sales and Broadcom's new hybrid model with SaaS. It's compelling.
But is it rigorous enough? I worry that focusing just on high-level categories like hybrid model might overlook the actual magnitude of the risk reduction from the software.
That's it. So here's our third point. To fully justify classifying Broadcom as a fortress and a superior risk-adjusted investment, the analysis report needs to provide clearer financial weightings on the contributions from VMware and the diversification strategy.
It's a great claim. The AVGO advantage is the hybrid model, its diversified customer risk.
Well, sir, compared to NVDA's high concentration. All compelling claims, but they feel a bit generalized right now. There's no specific data supporting the magnitude of that safety difference.
The reader needs to be able to see the foundation. If Broadcom is a fortress, how high are the walls? How deep is the moat?
And we can't just assume the analyst has perfect granular VMware data. It's a new acquisition.
So what are the proxies? What can they credibly use to prove this stability?
I think the suggestion is to provide more granular data on the non-hardware parts of AVGO's revenue, show that countercyclical stability from the software, and make the diversification claim tangible.
How?
The easiest way is to specify the target percentage of total revenue that is now attributable to recurring software, to SaaS, post-VMware.
Right. That one figure, the percentage of total revenue, that is now non-cyclical, high-margin, sticky software that directly demonstrates how much stable cash flow is there supporting the dividend, lowering the volatility.
And if you can't get the exact GAAP number, cite management guidance or analyst consensus on the expected ARR from the combined software division. Use that to project the stability.
And you do the same thing for the diversification argument.
You have to. Quantify the estimated revenue percentage from each distinct segment. What comes from Apple, what from Google and Meta, what from industrial, and now what from the software stack.
Then you contrast that directly with the concentration risk for NVDA.
And that contrast moves the argument from a general statement like, we're diversified, into a quantified financial advantage. It turns the safety factor from a footnote into a primary pillar of the investment.
That's critical. That really maximizes the impact.
It does. Okay, finally, let's look at the technical analysis and trade setup. This is what drives action. It's about timing the investment.
And look, building on the fundamental arguments we just talked about, the custom silicon, the fortress balance sheet, the technical section feels a little bit isolated.
How so?
It correctly identifies the 350 support level, the bull flag pattern. But the language is a little generalized for a report this sophisticated. It feels like a separate piece of analysis that was just bolted on at the end.
I see what you mean. So the fourth point is this. The technical analysis, while essential for timing, currently feels somewhat isolated from the powerful fundamental drivers, and it needs to be woven back into the core financial thesis to maintain the report's sophisticated tone.
Right. When you use phrases like RSI cooling off, and it's in its own section, separate from the analyst consensus and financials, it breaks the narrative flow.
It breaks the link between why the stock should go up, the fundamentals, and when to buy it, the technicals.
So the suggestion has to be to use the technical setup as a strong conclusion, a mechanism that directly links the trading opportunity back to those core catalysts.
The custom silicon ramp, the hybrid model strength.
Exactly. The current price action shouldn't just be viewed through charts. It should be seen through the lens of a market that hasn't fully priced in the 2026 story yet.
So instead of just saying, this is a healthy pullback investors wait for, you explicitly connect the current price, around $349, and that critical $350 support level.
You connect it to the analyst consensus for December 2025.
Yes, name names. Reference Cantor Fitzgerald, Morgan Stanley, whoever is calling AVGO ripe for outperformance. And then you argue that this technical dip right now is the market's last real chance to get in before those fundamental catalysts hit in 2026.
That frames the technical signal not just as chart reading, but as a temporary mispricing event. It gives the reader a sense of urgency that's tied directly to the fundamental analysis.
Absolutely. And then you frame that 465 plus 2026 target as the valuation that fully reflects the market finally accepting the VMware stability and the diversified customer base.
Which reinforces the whole growth at a reasonable price advantage. It brings everything full circle.
Seamlessly integrates the trade setup into the core investment narrative.
That was a deep dive. I have to say, the undeniable strength of this analysis report is identifying that second wave of AI infrastructure, and the detailed technical breakdown of the networking shift is fantastic.
Oh, definitely. The report makes a very strong case for AVGO's strategic position as the architect of this next